But then you have the whole oh shit moment. It's like, okay, what do I do tomorrow? Right? Like, all right, I want to build the next visa, but I have no idea what to do tomorrow or next month.
It's great to be here, and thank you, Nitya, for joining us. Nitya, for those of the folks on the line who don't know who you are, could you just give us a little bit of an introduction? Tell us a little bit about your background, how you got involved in setting up Simpl, sort of the genesis, the foundation story, if you like.
Absolutely. First of all, thanks for having me on the show. So my background is I grew up in North India. I was born and brought up in North India, and then went to school and college, and then in 2002 moved to the US to go to grad school. And then starting 2004 to sort of 2013, 14, I worked on Wall Street in New York, first at Bear Stearns, then at Goldman Sachs, then at a hedge fund, primarily trading structured credit. So that's what I did. And honestly, I never thought I will move back to India to start Simpl. That was never the plan. I, had worked, kind of like had a great run for 10 years, kind of thought I was very good at what I did. But I was really looking for more. I was like, what does my next 10 year look like? And so, I was thinking about something entrepreneurial. And I was spending time in India, which is where my parents live. And my bank in India rejected my credit card application for a simple reason that in India, I did not have a credit card or a credit score. And that kind of like gave me a lot of interesting light bulb moments. And I will tell you more about them during the conversation. But yeah, that was the sort of the starting point. And naturally, what I thought was that in a place like India, and largely so many emerging markets, where we don't really have credit cards, but we have today's technology. So the fundamental question is not to me, the question was not to how do you make credit cards better? My question was, how do you reimagine the whole thing, right? If credit cards do not exist at all, and you're starting from scratch today, how would you build it, right? So, that's how we started Simpl, and that's a sort of founding story.
Awesome. And what was it like? Tell us a little bit about the personal journey. So you talked about how you were in North America, you were in the US, I'm guessing, hanging out with traditional finance bad boys in Manhattan. How did you end up deciding you wanted to set up a startup in India? And what was that journey like? I mean, it's one thing going from working for a very large institution, doing something quite sophisticated and technical, and then a completely different sort of set of skills, problems, challenges. Walk us through some of your kind of like that personal journey.
Yeah, I mean, I think as founders, that journey is always sort of honestly why I do what I do, because I feel like I'm a different person every year in a slightly better way. Because when you work at a large established organization like Goldman Sachs or McKinsey or anything like that, the reality of it is while jobs are very sophisticated and you could be very successful doing so, but somebody else built everything behind you to make you successful at what you do and do well. And the journey of starting something from scratch is the opposite of that, where there is really nothing except an idea or a thought or just like some sort of an itch to start with. Like in my case, just like first the itch of why did I get rejected for a credit card, and then like this fundamental question: why would somebody build a credit card in India? Why not just like the new thing? And just like we are all obviously. My background is I'm an engineer and I'm a data scientist. I studied financial mathematics, so I've always been very, very, very keenly following technology. And before starting Simpl, I was actually thinking about what does the hedge fund look like if you were to reimagine a hedge fund itself, right? So I used to work in a hedge fund. Hedge funds have been whatever they are in terms of the business model for the last 20, 30 years, the same thing, but how do you build a hedge fund as a platform, right? That's what I thought I'll do. So I was always very interested in technology, but yeah, I mean, the fascinating part of being a founder and like starting something is, you start with an idea, and then you have like those oh shit moments every day, every second, every month, and I think the interesting thing I'm learning is that every year you feel the next year will be better, or different in a very different way, I guess. Initially, I used to think it would be better, right? In terms of you'll have more customers or more money or more valuation, whatever in the bank. And those things, obviously, if you keep on doing what you do, things grow, but the challenges change, and they change so fast and so differently. And as a founder, as a CEO, and just the team, can you adapt to it? Can you reinvent yourself? Because a fast-growing startup changes itself every 6 months. Really, it's a different thing. So that change and the personal journey of that change, and then what you need to invest in yourself to be even capable of doing so is pretty exciting.
And can you share any of the oh shit moments?
I think there's somebody who said something to the effect that you have the best day of your life and the worst day of your life on the same day often. I think my first oh shit moment was, when we started, when I first conceived Simpl, right? I was kind of like, I got rejected for a credit card, and then I was like, okay, what is a credit card? I mean, obviously, the consumer use it, but how does it work? And then I realized this thing really does not serve the merchants and consumers very well, right? It really serves the banks, right? It's a bank's product, right? And banks are the one benefiting. And obviously, we all do transactions, but we end up paying late fees and interest rates, and the customer merchants are paying so much fees, all of that. And to me, it was my thing was on the opportunity of internet is, there are these business models, around for 50 years that are adversarial to its own customers, meaning they make money when the customer loses, right? The classic example is interest rate on credit card revolvers, right? Well, for a credit card company, revolving is perfect, but for you, it is like financial suicide. You should never do that. And here is the business model where there's this conflict, right? And then you see obviously business model like Amazon, right? Amazon keeps on giving you more value on Amazon Prime and not moving the price for it, right? I mean, and obviously the old school business will be like, oh, I'm giving you more money and more value, so give me more money, right? And so to me, it was like this glaring problem on payments, this value chain of payments, probably worth $1 trillion of market cap, taking crazy amount of economic rent from both consumers and merchants, and really there's nothing to do. So I was like, well, that's what I want to do, right? Might take 10 years, maybe longer, 20 years, but that'll be cool, right? So I was like, my question changed from what the credit card looks like to what does the Visa look like? Like, how do you build a new Visa, right? And so it was very clear to me, the most marginalized counterparty in payments, and then obviously, as you think about the world today, online commerce, the most marginalized is the retailer. And the smaller you are, no one cares about you, right? So, obviously you can't negotiate anything on payments. And then in the online world, there is this whole army of tech companies from Amazon to whoever who's just like hell-bent on commoditizing you because they're all consumer centric, right? So it was very clear to me, the next Visa has to be a network of merchants, right? So that's how that got me excited. I was like, okay, this is so much more interesting than building a hedge fund thing. But then you have the whole oh shit moment. It's like, okay, what do I do tomorrow, right? Like, all right, I want to build the next Visa, but I have no idea what to do tomorrow or next month. And obviously did a bunch of things, and we raised our seed round, great investors, and built a team together. We started building a product. And my next big oh shit moment was, Visa, when you're building the difference between building a credit card issuer and sort of like what we have, it's a two-sided marketplace, right? So it is like chicken and egg problem, right? And we built everything. We spent about 6 to 9 months building this, and we were interacting with retailers, big and small in India, and everybody would be encouraging, right? Because it sounds interesting, but when we were get there to sell, like no one's buying, right? And I think there was definitely a bunch of times like, shit, this will never take off, because it makes sense. Why would you be the first retailer to sort of integrate with a startup with this crazy concept that you can just buy and not pay for it? And people will be like either saying it clearly or sort of not saying it, but which is even worse, that, oh, when you have 10 customers come to us, but who will be your 10 customers, right? So I have to often say the first 100 retailers in something like what we do is impossible. The next 1,000 are very hard, but the next 100,000 is easy, right? So it's one of those things. So that was my second oh shit moment. And since then, those oh shit moments seems like less oh shit, because you kind of get used to it. You kind of like, no, yeah, this will happen. And this is not going to be the end of the world. Because in the beginning, it was like, I was like, oh, this will be bad. And I'm going like this, we have raised money. We have so many people who work here. And like, really, we have to shut everything down because, I thought we are building the next Visa and no one really, ready to even buy it. And yeah.
Gaurav?
Thanks, Ronit. I mean, it's a brilliant story so far. I mean, from a founder that moves from one sector to a new sector and takes on all these challenges from scratch. I mean, that's quite a task you have to manage. So, setting aside all those challenges that you have compared to the incumbents, building out the customer journey, the merchant journey, the back end, the regulations, learning things on the fly, paying attention to things that are broken, or taking advantage of an opportunity which the incumbents can't grab when connecting to those merchants and customers, right? That's a journey you've been on, I think, from 2015, correct?
Yeah.
But, looking at the landscape now and comparing it to another industry, which is the vape industry, if I can for 1 second. If you look at the vape industry, it went through a moment of, it started as a brand new concept in an existing market with a similar product. It moved into a space of adoption and an increase. And then the third phase of that industry was pushback from the incumbents. This is actually bad for you. And what we're seeing right now on a global scale, not just in our market, is this pushback from the incumbents who are now taking notice, saying, wait, what they're doing is wrong. They're extending credit to people and institutions, and they must be enforced and shut down. There's this tone of knowledge. And I think the next phase, personally for me, if I can be a little bit of a guru and look in the future, seems to be a lot of purchases. Just like BAT bought a lot of the vape companies that they were trying to shut down or go against, they ended up investing in them. So I wanted your perspective. Are you seeing a lot of that moments right now where the incumbents are trying to use regulation as a pushback for the adoption of the technologies and the stack?
Yeah, I mean, that's an interesting question, right? Because in certain industries, and this is like the vape industry, I guess, taxi hailing, Uber, Airbnb, anything to do with fintech or health tech, there are always incumbents, right? And incumbents end up, obviously creating their own moats. And one of the moats is, sort of regulatory arbitrage, right? Or sort of like regulatory capture, so to speak. And of course, any competitive industry will compete with their on their playing field, because they obviously don't know how to play on the other side, right? Yeah, I mean, like, so I think what we are seeing, at least in India, is first, everybody wants to do BNPL, right? So till 1 year back, what is BNPL? Like, literally, when we did what we are doing, people are like, what is this? Why would somebody do this? And everybody run with money. You don't understand India, all that. And now, next thing you know, everybody is doing BNPL. Even if you're doing a credit card, you call it BNPL, right? So I think we are going through that journey. And yeah, I mean, I'm sure I do expect there'll be pushbacks. And yeah, I mean, I think, I think the exciting thing about technology is that, things change very fast. Not from a technology point of view, it just changes the players in the market quite fast, right? So, I think it is Ben Horowitz that says it really well in his book, Hard Thing About Hard Things, which is obviously a seminal book in sort of entrepreneurship, which is technology industry is like three-dimensional chess, like in Star Trek, right? Things are always moving. Everything is moving. Technology is moving. People are moving. Markets are moving, and there is always a move, right? You can make, right? It seems like there is no move, but you can always make a move, right? And that's something we have seen, right? When you forget about regulations, right? If you think about e-commerce, and we are very excited about that trend at Simpl, and that's our sort of has been our vision from the day we started. And when we started, it was less so, which is this, right? If you think about e-commerce, there are two sort of companies that are very interesting right now. One is Amazon, which is obviously very interesting. The other is Shopify, which is sort of like Amazon, but fundamentally different. Amazon takes a consumer-centric view to e-commerce. Shopify takes a merchant-centric view to e-commerce, right? And obviously Amazon would like to crush Shopify through any measure, right? Because for them, e-commerce means everything should go through Amazon, right? But Shopify is so-called arming the rebels, right? It took them whatever a decade or two to even get noticed, right? No one knew about Shopify or cared, and till maybe 3 years ago, no one really thought about them and anything interesting or important. But now, it's just like a very interesting thing, right? I mean, that's the only thing I will say. But overall, what technology does is also, which I think often allows you to collaborate, increases the overall TAM of the market, right? For example, the way we think about e-commerce today, right? Or commerce on the internet, right? It is very small to what it could be, especially in India. Only 8 to 10% of the consumer retail is on the internet, right? In developed markets like US, it's like high 20s. In Europe, it's 40s and 50s, right? So India will take that trajectory, and therefore the pie is increasing. And I think in markets where pies are increasing, there is obviously a lot more sort of incentive structure to collaborate, and we are definitely seeing that in India. So we actually work with banks, and we are working with banks, iterating on business models, etc. But yeah, you're right. When TAMs or there is a clear winner in a TAM, then people start fighting. So let's see what happens. But that's a part of the journey, I guess. Those are your next set of oh shit moments, I guess.
Thanks a lot for that, Nitya. I'll hand back to Ronit.
Yeah, thank you. When you look at the broader fintech ecosystem, how do you see Simpl fitting into it? So what are some of the risks and positives about where we are now? Obviously, funding is very ample. There's a lot of money flowing in to the Indian ecosystem. A lot of international money, American money coming in. Talk us through how you see yourself fitting into this, ecosystem and the kind of outlook. I mean, what does Simpl look like in 3 or 5 years down the road? Do you have to do several more funding rounds? Are you going to be profitable at some point soon? Things like that.
Yeah, I'll tell you what we think will look like first, and like what is our mission. So the way we described our mission is on day one is empowering any retailer, big or small, to be consumer centric. The guy on the street wants to be consumer centric, and we are building the sort of operating system to deliver that value to retailers. Now, when we look at e-commerce, one thing is very clear. Of course, there is the Amazon's the world, and they have the power of technology and so much investments they made, and obviously money, etc. Where they're able to sell online and be consumer centric, and in doing so, commoditize the retailer quite a bit, right? But with Shopify and all these enablers, there is this, anybody can go online. Now, when we think about that journey for the retailer and of course their customer, broadly, there are sort of 4 layers, right? One is a layer of sort of how do I get people to the top of the funnel, right? As a retailer online. In that journey, if you think about the Amazon world, you would come through an Amazon search. But today what is happening is it's getting unbundled, right? People are discovering new things, word of mouth, Twitter, Facebook, Instagram, etc. So there is no one source. It's like very connected, and it's just going in that direction, right? So people can find you anywhere, right? And you just have to build a great product and figure out some of these platforms. Then people come to your top of the funnel, and you go to a website. And so that's just like served by things like Shopify and so on, and WooCommerce help you build websites and design them very well. Then is checkout and payments, right? And then last is logistics. Now, all of these things have to, so if you think about Amazon, what is Amazon? Amazon is all these 4 things put together in one centralized unit like Amazon. They give you marketing, then of course logistics. But if you are a retailer who is independent from Amazon, how do you do that, right? So today, because of Instagram and so much other things, top of the funnel is, getting solved. Shopify's of the world have given you the web presence. There is a lot of logistics happening. Where it's still broken is checkout, right? How do you sort of like have this checkout journey that is beautiful, easy, trustworthy, affordable, and stuff, right? So basically what Simpl looks like, therefore, a few years out is you'll be able to, go to any retailer, you'll have a unified identity. You'll be able to just like sign in and like you'll have the same experience like an Amazon because it'll be a unified identity across the network. That very simple is. And then you can do one-click checkout. If you don't want to do buy now, pay later, you can split your payments into 3 equal installments, and then you can complete the transaction. If the merchant wants to give you loyalty rewards, they can give you loyalty rewards directly to the customer, maybe as an NFT token, right? Give it to you, as opposed to give it to Simpl to give it to you, right? We are really trying to platformize the whole thing. And that's kind of like what Simpl looks like. And we make any retailer who wants to go online compete on the same terms of Amazon online, right? So that they can be independent, they can build brands and user experience that they want.
I know we're coming towards the end of our session. There's some questions that have come in online, so I'm just going to read out a couple, Nitya. Question number 1, how is India different from other countries of BNPL? In 60 seconds, please.
Yeah, few things. Penetration of credit card. India's penetration of credit card is 3% of overall bank population. 900 million people have a bank account, 30 million people have a credit card. So that's number 1. The second is there are very few people with formal bureau data. So therefore, anything to do with underwriting has to be a little bit more of an innovation than just taking bureau information. And then last but not the least is we have the most sophisticated financial technology infrastructure. For example, UPI. In India, like in developed markets, US and stuff, there is ACH, 3-day settlement and stuff. India, you can move money in real time 24/7 for no cost, right? So the opportunity is you can really take this infrastructure, and of course there's identity, Aadhaar, and so on. So you can take this infrastructure and build user experiences on top of it very, very quickly. And these are all open public utilities, by the way. Any startup can come tomorrow and just start building.
And maybe the second and last question, because we run out of time, is any advice for, this is a very general question, any advice of fintech entrepreneurs in India?
I think the only advice I would have for fintech entrepreneurs and entrepreneurs in general in India or otherwise would be, if you really believe in something, don't give up, right? It's, those oh shit moments come, often it seems like this is the end of the world. The only thing that separates from the winners from people who end up sometimes not winning is really carrying on. And it seems like it is the hardest part, and the most important part is what I've seen, because one thing is for sure, we'll all make plenty of mistakes.
And on that note, thank you so much for joining us. It's definitely not been a no shit moment having you on this webinar. It's been awesome. On behalf of Gaurav and myself, big thanks. And the session is now over.
Thank you.
Thank you.
Thank you, everyone.